Welcome to The Explainer. Today we're tackling a big one, a new EU regulation that might just affect your business, the Corporate Sustainability Reporting Directive, or CSRD for short.
So if you're running a small or medium-sized business in the EU, you've probably heard the buzz about new sustainability reporting rules. You might be wondering, does this actually apply to me? Well, we're here to clear that up.
Okay, here's how we're going to break it down. First, we'll cover what the CSRD even is. Then, the big question, who has to report? After that, we'll look at the timeline, unpack a really important opt-out you need to know about, and wrap up with how you can get ready.
All right, first things first. What exactly is this Corporate Sustainability Reporting Directive?
Think of it this way. The EU wants to make sustainability reporting way more common, consistent, and, honestly, more reliable. It's all part of a bigger plan to give everyone, investors, customers, the public, a clear window into a company's real-world impact on people and the planet.
Okay, let's get to the million-dollar question, right? The one you're probably asking yourself. Does this thing actually apply to my business? It's actually pretty straightforward. There's a simple two-step filter. First, are you what's considered a small or medium-sized business, an SME? And second, are your securities publicly traded on an EU-regulated market? If you're nodding yes to both of those, well, then you're in scope.
But, and this is a big but, there's one major exception. The directive explicitly excludes what are called micro-undertakings, so we're talking about the really small businesses here. This means that even if your securities are listed, if your company is small enough to be considered a micro-undertaking, you're off the hook.
All right, so now that we know who's in and who's out, let's talk about when this all kicks in. Let's look at the timeline.
The first big date you need to circle on your calendar is January 1st, 2026. This is when the reporting requirements officially start for any financial year beginning on or after that day. But hold on, see that second date, January 1st, 2028? That's super important because it signals the end of a special opt-out period.
So let's dive a little deeper into that transitional period. It's actually a pretty big deal because it gives SMEs like yours some much-needed breathing room.
Basically, this transitional opt-out means that for a limited time, eligible SMEs can choose not to do the full sustainability report. It's really just a temporary measure, designed to help smaller listed companies get their ducks in a row before they have to go all in.
And you don't have to take my word for it. Here it is, straight from the directive itself. The critical part is this. If you opt out, you still have to briefly state in its management report why the sustainability reporting was not provided. So what does that mean? You can delay, but you can't just ignore it. You have to explain your decision. So you might be thinking, great, I can opt out for a couple of years so I can just kick this can down the road, right? Well, maybe not. Why should you even be thinking about this now?
Well, even the directive itself points out some pretty compelling reasons to get started early. We're talking about things like better access to financial capital, getting a handle on sustainability risks, and opportunities. Plus, it can really boost your dialogue with stakeholders and, of course, improve your company's reputation.
So here's the bottom line. These rules, they're coming for listed SMEs. That's a given. But there's this really clear transitional window to prepare. It's best to think of this opt-out period as a runway to get up to speed, not as a complete stop sign. And that really leaves us with one final big question to chew on. Your business can opt out until 2028, but the real question is, should it? Just because you can delay doesn't always mean it's the smartest move for your business in the long run.